All right, let's talk Verisk. You know, the data analytics powerhouse for the insurance world? Well, they just dropped their 2025 earnings report. And let me tell you, the headlines look pretty shiny, but the real story, it's got a few twists and turns. So let's dive in and break it all down.
Right out of the gate, this number just pops off the page. A 13% jump in adjusted earnings per share for the fourth quarter. Wow. Now, for investors, that's a huge deal. It screams profitability. But is it the whole picture? Not so fast. Yeah, because one number never tells the full story, right? You start looking closer and you see revenue is up. But wait, net income is down? So what's the deal? How can that be? We've got to get under the hood here. Okay, first things first. Let's pull up Verisk's overall report card for 2025. This will give us that high-level, big-picture view of how they did. So just so we're all on the same page, everything we're about to unpack comes straight from the source. This is Verisk's official financial release from February 18th, 2026. No speculation, just the facts. Okay, and here's where it gets really interesting. Check this out. Revenue, solid growth, up almost 6%, awesome. But then you look at net income, and it's actually down more than 6%. Huh? And then the number we started with, adjusted earnings per share, is up a whopping 13%. So how can profit be falling and soaring at the exact same time? It feels like a riddle, right? Don't worry, we're going to solve it. But before we crack that profit code, let's tackle an easier question. Where did that nice revenue growth actually come from? To figure that out, we've got to look inside the company, at its different business units. And you know what? The answer is crystal clear. One part of the business really put the team on its back, and that was the underwriting division. I mean, this chart says it all, doesn't it? We're looking at what's called organic constant currency growth. It's a clean way to see how the core business is doing. And wow, underwriting is up a super strong 7.2%. And the claims division, basically flat. So it's no mystery where the real engine for growth is right now. So you might be asking, what exactly is in that underwriting segment that's doing so well? Well, it's not just one magic bullet. It's broad strength across all their key services for insurers. We're talking everything from the basic forms and rules all the way to those super sophisticated models for catastrophes and other big risks. Okay, time's up. Let's get back to that head scratcher from before, the two profit stories. We've got one number pointing down and one pointing way up. It is time to connect the dots. So let's put them side by side again just to see how wild this is. You have the official by-the-book net income, and that fell 6.2%. But then you have this other metric, adjusted EBITDA, and it rocketed up almost 10%. I mean, that is a massive difference in direction. So what on earth gives? Why the huge gap? Well, the secret is all in the name. Adjusted. It all comes down to what gets counted and what gets ignored. Here's the key. When you see adjusted, it means it's a non-GAAP metric. That sounds complicated, but here's a super simple way to think about it. It's like your paycheck. Net income is kind of like your gross pay, the big number at the top. But the adjusted number is like your take-home pay, after you've taken out all the weird one-time stuff. It just strips out the noise to give you a clearer picture of the core day-to-day business health. And this is so important. The big takeaway is that while both numbers have their place, a lot of savvy investors, the pros, they really focus on those adjusted numbers. Why? Because it gives them a much cleaner, apples-to-apples way to see if the actual business operations are getting stronger or weaker over time. Okay, so now we know the core business is healthy, and a healthy business generates a ton of cash, which leads to the next big question. What is Verisk planning to do with that mountain of money? Let's check out their game plan. And when I say a ton of cash, I mean it. Check this out. Free cash flow in Q4 was up an incredible 38%. That means the company is just minting cash, way more than it needs to run its day-to-day operations. It gives them a ton of financial firepower. So what's the plan for all that firepower? They're basically doing two major things to send that value directly back to their shareholders. First, they're upping the dividend. That's the regular cash payment you get. And second, they're buying back their own stock, which helps make every remaining share just a little bit more valuable. And listen, they are not messing around. They're boosting the dividend by a healthy 11%. But the real headline grabber, the board just authorized a massive $2.5 billion for share buybacks. And they're not waiting around. They plan to kick things off with an accelerated $1.5 billion buyback right away. That is a huge vote of confidence in their own future.
So let's recap. The company is strong, it's gushing cash, and it's rewarding shareholders. That's the story of today. But what about tomorrow? Where's the next wave of growth coming from? Well, for Verisk, the future has three letters: AI. And this isn't just talk. This is coming straight from the top. The CEO, Lee Shavel, made it super clear. He said they've already got generative and agentic AI tools out in the wild being used by clients. He's basically saying, hey, with our one-of-a-kind data and our deep industry ties, we are in the perfect spot to win with this technology. And you can see that confidence reflected right here in their official forecast for 2026. They're putting their money where their mouth is, projecting solid growth across the board: revenue, adjusted profits, and earnings per share. These are some seriously optimistic numbers. And that really brings us to the final multi-billion-dollar question, doesn't it? Verisk has this incredible treasure chest of data, decades of experience in the insurance world, and now they're hitting the gas on AI. Can they really fuse all of that together to not just keep growing, but to truly dominate their market for years to come? That's the story we'll all be watching. Thanks for digging into the numbers with me.